Hello and welcome to Season 8 of the Lawyers Learning Center with DHIA podcast. This season, we will be talking all about today's cyber exposures, cyber liability, and protecting your law firm against cyber threats. Tune in every Thursday and check out the description for more related resources. To kick off the season, we will walk through our Cyber Liability Self-Assessment worksheet and the importance of quantifying risk. Smart businesses endure cyber attacks confidently because they quantify their risk and plan for it. Let's dive in. According to Packet Labs, a threat actor targets a business's cybersecurity infrastructure every 39 seconds. Hackers get better every year. In fact, they get better every day. And employees keep clicking on these malicious emails. Clicking on the wrong email link or opening an infected attachment can cause your business to suffer greatly. Your business can suffer from lost productivity, lost work product, loss of current and future revenue. Yes, future revenue too. Do people want to do business with companies who've had a breach in cybersecurity? Your business could also suffer long-term reputation damage. Again, who wants to do business with companies that fail to protect a client's data? Your business could also suffer litigation, fines, and penalties, and loss of competitive advantage. The exposures are there, and small businesses are not immune. In fact, they are prime targets. Due to the type and volume of data held by law firms and the judicial system, hackers are moving the legal industry to the top of their target list. And before you excuse yourself from this topic, yes, the target list does include solo practitioners and small law firms. You don't have to be a huge law firm to be a target for cyber criminals. So what do you do about this? Well, you want to start by quantifying and understanding your risks. Quantifying sounds hard, but it's not. And it's often easier to ignore the reality of exposure and think, it won't happen to me. However, you can do a reasonable self-assessment in less than an hour. Don't be a victim. Take the time to assess and make a plan to protect your business data and the data of your clients. The link to our Cyber Liability Self-Assessment worksheet will be in the description. You can either pause this episode now and go download that real quick, or continue this episode and download it at the end. Step 1 is taking inventory. Under the first section of our Liability Self-Assessment worksheet, you will identify which forms of data apply to your law firm and whether these are regulatory exposures. The checklist provides a column for potential fines for HIPAA, CCPA, GDPR, FTC, and a column for other. After identifying your data exposures and the potential regulatory expenses, you'll add up the total exposure cost. Next, there is a row to subtract an amount that would be covered by insurance. At this point, it may be worth having a conversation with your insurance agent, especially if you don't have a standalone cyber liability insurance policy. Next, you will calculate your net regulatory exposure. This amount will be your potential regulatory expenses minus what your insurance will cover. If the number here would financially strain your business, you may want to consider a more robust cyber liability policy. Increase your limits, purchase add-ons, design a policy that fits your specific needs. Step 2 is estimating financial damage from a potential data breach. This chart lists out the exposures and the potential damage of lost productivity, lost work product, reputation damage, current and future revenue loss, lawsuits and damages awarded in court, loss of competitive advantage, and so on. This may be difficult to calculate, but remember, it is just an estimate to give you an idea of where you would stand financially in the face of a data breach. So take lost productivity, for example. If a data breach occurred on employee records, how would that hinder your firm's productivity? Who would need to pause tasks or projects in order to salvage the data loss? What repercussions could happen if these tasks or products were put on hold? Then take the average pay rate of each person involved and multiply that by the estimated time loss on projects. In this example, maybe you imagine it would only take a few hours of time and costing approximately $300 in financial exposure. While that may not necessarily break the bank or destroy the timetables on projects, this is merely a fraction of the bigger picture here. There's the lost work product, revenue loss, reputation damage, all these other things. And all these things matter, and they add up. In addition, there's a residue left behind. If work product is set back, how do you make up for that lost work product and get work product back on track as projected? You'd have to work double time until you're caught up, or simply bite the loss and stay behind on your projected goals. Or take reputation damage. If your law firm's reputation is damaged, what losses will your practice take? Less new clients, lost current clients? Then consider the cost of rebuilding that reputation. That takes time, money, and great strategic planning. So consider all of this in a wide frame lens when you are adding up all of these estimated financial damages. Again here, you'll add up your total financial exposure in each column, subtract what's covered by insurance if applicable, and calculate your net financial exposure from a potential data breach. The final step of the worksheet is to summarize your overall expenses and exposures. You'll add your total net exposure amounts from the regulatory fines page and the data breaches page. Then you'll add those together to see your total net exposure. Next, you'll enter your free cash flow amount. This is the cash amount your law firm or company produces through its operations minus the cost of expenditures on assets. In other words, your free cash flow is the cash left over after paying for operating expenses and capital expenses. The final row has you calculate the estimated months of financial recovery by dividing the total net exposure amount by the free cash flow amount. After assessing and quantifying your cyber liability risks and seeing those final numbers, can you financially survive a cyber attack? Are you as prepared as you want to be as far as financial status, insurance coverage, and processes? Take your assessment and create an action plan. Purchase quality cyber liability coverage. Educate your team and equip them with the tools needed to protect your business and its clients. This assessment is worth nothing unless you take action. Cyber threats are like dark, angry clouds of jargon and technology. And these clouds have the power to consume businesses. Smart businesses assume they will be attacked and have plans for when. When, not if, they do. Do you have a plan? We are all one malicious email away from a cyber attack. No one is immune. When an employee clicks on that email, will your business survive? This cyber liability self-assessment was designed to help you answer that question. The link to download this worksheet is in the description. Remember, everything is a statistic until it happens to you. Rise above the statistics by having a plan. Take the first step and quantify your risk using our Cyber Liability Self-Assessment worksheet. Thank you for tuning in to the Lawyers Learning Center with DHIA podcast. We are glad you're here with us and hope you enjoyed today's episode. If you did, we invite you to subscribe to the podcast and share the episode with someone you think could benefit from it. Please leave your thoughts or questions in the comments. Help us improve and better serve you. Next week, we are going over what data breach insurance is and why you need it. Subscribe to the podcast or sign up for email reminders to make sure you catch every episode.